how to file a calamity claim, California, how to get your property taxes reduced, California wildfire property tax exemptions, in addition to general Prop 19 rules. All right, guys, what's up? Thanks so much for joining us. Today, we've got property tax expert Carl Lindner with us. Carl works as a Assessment Counseling Services, LLC. Carl is a property tax consultant. He works in the LA County Tax Assessor's office. He knows the ins and outs of Prop 19 and property taxes, and he is the perfect guy for joining us today. I know a lot of you are searching online for content about how to file the claim, what you can do, how you can defer your taxes, all that kind of good stuff. Carl, thanks so much for joining us today, man. Good to see you.
Hey, good to see you too, Alan. Thanks for having me.
Absolutely. Appreciate your coming aboard. So, Carl, let's get right into it. I know people are kind of curious, how are things going with you? I mean, I know people in general, obviously in the Palisades and Eaton fires, are trying to figure out how to logistically manage this process of having lost their home, the rebuild process, the insurance payouts. I think there's a couple things we really haven't been talking about a lot, and that is how to defer their mortgages. But most importantly, and why you're here, is how can people defer their taxes, or how is it working with the fires?
Yeah, absolutely. Thanks for giving me the opportunity to talk about this. Like you said, priority is usually insurance, number one, because they pay out. And then you have your mortgage and your other issues you have to take care of. It's tough to lose a home. It's extremely difficult, and there's a lot of things you have to balance. There's one thing that people don't necessarily think of until the end, and that's what I'm here to talk about. You have property taxes. The way that works is you have to file a claim that's referred to as a misfortune and calamity. That's the official term. What that means is there's a one-page form on the assessor's website that allows you to file a claim with the county assessor with any government-referred disaster, right? So you have a governor-declared disaster like Palisades Fire or Eaton Fire.
Yep.
A couple of years ago, we had the Woolsey Fire, all the way back to the Northridge earthquake, which is one of the more famous examples of that, right? So
People got to lower their property tax bases then too.
yeah, so what happens is you have to determine how much of your house was damaged. Now, in this example for Palisades and Eaton, Cal Fire and the LA County has gone around to each parcel, and they already have photos. They're online. If you haven't had the chance to get to your home, a lot of people have by now, but you can go and see how much is left of the original improvement. Now, they call it an improvement. That just means building. That just means you're building in structures on your property. So that's where you can get the savings. They're not going to lower your property tax value on your land portion, but your assessed value is divided between your land and improvements. So for example, if your home was a total loss, they have the opportunity, if they have the imagery from the county just like you will, county assessor will see it and say, okay, the house is gone. They're going to take the improvement value line item off of your taxes as long as you file this claim form within 1 year.
Are you saying that if I've got a total loss, the property tax base will basically limit it to the taxable amount for the land? But if the house is there's a lot of people that had fire damage. So the house isn't totally a loss. So how does that work?
So that's where it gets a little sticky, right? So if there's visible damage, it's pretty clear, right? You're doing it in percentages of damage. It's the easiest way to explain it to the assessor. It's the easiest way that they review it. So let's say it's your garage burned down and maybe the side of your house a little bit, but the rest of the house held up okay. That's like maybe 25%, 30%. You kind of have to estimate, and the assessor is allowed to estimate a little bit too as to what percentage was lost. If you have smoke damage, then we're having a really complicated conversation with the assessor, because you could have a house that looks completely fine. I have a couple of clients that have been lucky enough to save their homes. Their homes look completely fine from the satellite imagery, from the on-site imagery, street view, but the problem is it's smoked out, right? You're going to need hundreds of thousands of dollars in drywall repair. Probably got to take out the cabinets, got to repaint, got to do the floor to get all that smoke smell out. And that's when you have to kind of explain to the assessor how much you lost. And they'll essentially determine a percentage to take off of your improvement value until that's fixed.
So do you hire I'm assuming you hire an independent person or somebody like that. Maybe I guess would that be the adjuster, or would that be part of the insurance part?
It is usually part of the insurance part. You either have contractor quotes or you have your insurance adjuster's report that you can show to the assessor and be like, look, I know the house looks like it's completely fine from the outside, but the inside is unlivable until we repair all the smoke damage. And then you have to talk to them a little bit about it.
Well, so if it's a total loss and I filed a claim, how long if it's a total loss, I no longer have to pay property taxes until I rebuild my house, right?
On the improvement portion, you still have to pay based on the land, right? So let's say you have a $4 million home, you just bought it. The assessor, when they enrolled it, they put 2.5 million to the land and 1.5 to the building or improvement. If it's a total loss, they're going to take that 1.5 million off completely. But you still have to pay the taxes on the 2.5. There is the opportunity to defer your property taxes. The second installment, which is usually late by April 10th, that payment, you can defer it interest-free for the next year if you really are having trouble getting your money together.
On the land.
Yes.
Or land or the house. Basically, you're saying is as a result of the state of emergency, I can defer my property taxes for 1 calendar year?
Yes, the current installment that's due on April 10th. What they'll do is you defer it, and then hopefully by the time you'll get a reduced tax bill as of the date of disaster, which I believe the fires were on the 7th or 8th, depending on when the fire went to your neighborhood and if you had a total loss. They'll give you a reduction of the partial fiscal year, which is like January 8th until June 30th. And that improvement value, if it's a total loss, will stay off of your tax assessment until you rebuild.
Okay, that makes sense. And then so if it's the person that, let's say, had the smoke damage and they found out, let's say they've got $300,000 worth of damage to their property, regardless of the deferral, how would they adjust the property taxes due with, let's say, $400,000 worth of damage on a, $3 million improvement?
Sure. So what happens is because of Prop 13 in California, you might have a client or you might have a house that you've owned for 20 years. So you're paying already on a way lower assessed value than what the market value is. Your assessment might be like $2 million when the house is worth 10 now because you've owned it for decades. In that case, they're essentially taking the value, in theory, they're supposed to take the value of the damage and subtract it from the current market value, divided by the current market value. That gives you a percentage of damage, if you will. So let's say you have $300,000 in smoke damage. The house is worth 10 million. They're taking off not too much, not too much.
Oh, so what is 400,000 on? Is that 4%?
Roughly, yeah.
So that means they'll take 4% off of the existing property tax.
Yeah, it might not be that much. Like I said,
so it's really
when it comes to smoke damage, it could get a little hairy as far as how much they want to take off. It is a percent contribution, as they call it. So if you've owned the property for a long time, you do technically you're paying less property tax, but that also means you're getting less relief.
Gotcha. Well, it's interesting. I mean, I guess it makes sense. I mean, I'm theoretically still out of the house for a year. I don't get to use it. So I'm wondering, could there be an argument that I just have to pay the taxes on the land for that 1 year while I'm not in the house? I mean, I don't know.
It depends, right? So that they're allowed to put the property tax value for the improvements back to what it was once you finish repairs, and you have to keep them.
So if I have a total loss and I rebuild my house back up to, let's say I put some additional capital in, I guess I'm not sure how that works. So let's say I had a house that I purchased for $3 million 15 years ago. It's now worth 10.
Yeah.
And I have my low property tax, right?
Mm-hmm.
If I rebuild the house today, do I get to keep that property tax base? How does that wind up working?
Well, that's a great segue. You're allowed to keep it as long as you don't essentially overbuild. The rule of thumb for the assessor's office is, let's say you have a 3,000 square foot house, you can't build more than 120% more of the structure. So you can't build more than 3,600 square feet in that example.
Wow.
They'll bring you back the old assessed value without an additional new construction assessment, as long as you're
within 120%.
Yeah.
Okay, so interesting. I would imagine there's a lot of people that have money that were kind of like, yeah, I'm fine living in my house. So you're saying if they try to max out the floor to area ratio on their property and build a significantly larger house, would they get to keep the property tax base for the up to 120% of the square footage and pay the difference on it on the increase in size? Or would it be, no, if you exceed 120%, you're going to wind up having to pay property taxes based on whatever the square footage is of the house that you build?
So the way the law is written, you should pay the overage. What happens is, where it gets a little hairy is you have to leave the house. It has to be, the exact wording is substantially similar use. So for example, where some people might get in trouble is if they try to change the zoning in Palisades for additional density, which the city is talking about right now, that might entice people to build a duplex instead of their original house. If you do that, it doesn't matter if you build the exact same size house and then just cut it in half to make it a duplex. When you rebuild, it doesn't matter. You're going to have to pay a new assessment on that new structure because you didn't keep it a house.
Interesting.
You didn't keep it a single family residence. You turn it into a duplex.
So, okay, so by and large, you're basically saying the idea is you got to build it basically within 120%, similar to what it was in order to keep your property tax base the same. But just to clarify, so even if you do that duplex, let's say hypothetically, well, because your property taxes was based on the size of the improvement, right? if it was 3,600 square feet, and let's say you build a duplex and it's, now 6,000 square feet in total, do you still get the existing property tax base? You're
No, see,
saying if you change it
that's where you
from a
get in
single
trouble.
family to a duplex, boom, you have to pay new property taxes.
Yeah, that's where you're going to get in trouble. So
Got
that's why
it.
our firm is advising people if they need advice on
Yeah,
it.
but Carl, I don't think people are going to be doing that. I mean, the only thing I can see people
Yeah,
doing is building ADUs, but an
I will
ADU,
tell you, in Palisades, they're probably not going to do it. In Altadena, with the Eaton fire, they might want to.
oh, you're saying you're right because of the new law that I don't know that that went through building and safety, but you're talking about being able to like, split lots and put multiple
SB 9, State Bill 9, yeah.
SB9.
Yeah, I mean, the Palisades is a different neighborhood, it's a little different income bracket, and yeah, people are going to want to keep their houses when they
Okay.
rebuild. But if you're on a larger street in Altadena, you might want to take advantage of that. The problem is, like I said, if you build a duplex or you try to split that lot, you're not going to get your old property tax basis back.
Okay, so there's gonna be a lot of people. I mean, like I, look, from a real estate standpoint, if I'm a family who lived on a, 6,500 or 7,000 foot lot, and it's been my family home for years, and I like my backyard and my pool or whatever, I don't really see myself dicing that up and turning it into a duplex and having some kind of a communal living situation. But you never know. I'm sure there'll be some people that are doing that stuff. So just to wrap that up, so what I hear is again 120%, and basically your property taxes stay the same. But if it stays a single family residence, and let's say I make it 5,000 square feet, the tax basis that exists for the first 3,600 square feet up to 120% of that would stay as it was, and I would pay the difference for the larger space.
Yeah,
Okay.
that's how it's supposed to work.
Okay, awesome. Awesome.
I actually used to work. I buried the lead into this video. I used to work for the county assessor, and when I did, I worked in the West District office in Culver City, and I used to process some misfortune and calamity claims on the back end. So if people overbuild, they're going to try to hit you up for that extra money.
For the extra footage, got it. Well, I guess that kind of makes sense. All right, so let's say, okay, what about the people that aren't going to rebuild? I mean, we have Prop 19 exists. It's the same rules as normal, right? If you're not going to rebuild, but interesting is if you're going to do Prop 19 and you move, it's basically it's a formula of the sale price, right? So my sale price before my house would have burned down might have been 5 or 6 or 10 million, but because it's burned down, I'm only selling the land. So now I'm selling less. That means I get less. How does that end up working?
Actually, no. And I'm glad we're breaking that down, right? So let's say you don't want to rebuild. You should still file the misfortune and calamity claim to get your improvement value lower on your property taxes until you decide what you want to do. However, like you were just alluding to, you're allowed to do what's usually reserved for people who are 55 and older. But now you can do it at any age. Let's say your house burns down. You have 3 years to determine, sorry, you have 2 years, 2 years to determine whether or not you want to buy a replacement property instead of trying to go rebuild this thing. Or you take your insurance money, you sell the lot and say, I don't want to do this. It's just not worth the hassle. The neighborhood might not be the same for a decade. So what you do is, the rule is that it's the value of the property as of the day before it burned down.
Ah, that makes sense.
Yeah. So let's say you have a
Yeah.
$4 million house that burns down. Maybe you sell the lot for $2 million, right? Like that's what you were worried about if you
But
only
you
got
still get the 4 million.
yeah, the assessor is going to determine whether or not what it was worth before it burned down. So let's say it's worth 4 million. You sell it for 2 because you're only selling the land, but it's acknowledged on the day before the disaster it was worth $4 million.
I could buy up to a $4 million house and my property tax would stay whatever it was.
That's correct. Yeah,
I got
you'll be
it.
able to move your Prop 13 basis, no problem. And it is, like I said, unlike other parts of Prop 19, it is not age restricted.
Was there a time? Okay, so I see what you're saying. So you're saying so really any fire. What if it's a kitchen fire?
No, it
Does
has
it
to
have to
be
be it has to be a wildfire?
well, no, it has to be a government declared disaster.
Ah, so in order for me, if I'm 35 or 40 and I want to take my property tax base with me because of a fire, it has to be because of a government. It has to be because it was labeled a disaster.
Yes, and to be very clear, your house has to be more than half destroyed.
Oh, wow.
This is very important. And this isn't, oh, it's smoked out, I can't live there. It's not that. It is your house has to be over 50% destroyed and you can't rebuild. You're selling it in a damaged state. They value it as it was before it was damaged, but you're still selling it in a damaged state, and then you're buying a replacement property.
Very interesting. I can see how that's going to be making some people think about their strategy and how to make that work. So 55 or over doesn't apply if it's an emergency.
Right. If it is a government declared disaster and your house is over half destroyed, it doesn't matter how old you are.
Okay, cool. And then from a timing perspective, how long do people have to move then? Because what I heard you say is file the calamity claim, get your property tax base lower just to the land value, defer that for a year if you want.
Yeah.
And then how much time do I have to move then? Because I think if
You have
I'm
two
just doing a
years.
regular exchange with 19, I have a certain period of time, right?
It's the same time period. It's 2 years. You have 2 years from the date of disaster to buy a new home.
And successfully transfer. So 2 years to buy the home and successfully transfer it.
So realistically, we've done the analysis in our office here. We're helping people file misfortune and calamity claims. It is a one-page claim. You can do it yourself. But where we're starting to advise people is that if it's a year, right? So this happened first week of January, right? So let's say it's next March and you haven't rebuilt a darn thing because there's some sort of permitting problem or the city's dragging their feet or you really can't even get a contractor out there. You haven't even looked at it. You can't get an architect because they're backed up for years and work. And you just say, forget this. I don't want to deal with this. I don't want to deal with rebuilding. You can sell your damaged house or property and you just go buy a replacement. Because this isn't going to be something, a lot of people aren't going to be looking at this right now because they say, I have the insurance money, I'm going to rebuild. But if this becomes more and more difficult in local jurisdictions in about a year or so, people are going to start thinking, you know what, maybe I shouldn't even bother.
And then they're going to look at Prop 19 in the wildfire disaster exclusion. They're going to look at taking their property tax basis with them. Yeah, that's going to be a huge change from, having a $10 million house that I bought for 15 years ago to whatever property taxes would be based on buying,
but maybe you buy a super nice house in the Encino Hills and you're like, okay, I'll just move there instead. It's still a really nice house, but I'll buy it for 10 mil. But it'll still bring my low tax value over.
Carl, with respect to the wildfires, what else are you seeing or what else have we not covered on this discussion before we get into just, maybe parent-child or fighting assessed value and stuff like that?
I would say at this point, like I said, the form is very easy to fill out. It's readily available on the assessor's website. I would just say you get that in as soon as possible. If you're going to estimate, make it a fair estimate as to how much of your property is damaged, and there's not much else to do. If you're going to start rebuilding, you should probably discuss it with an expert. If you're going to take that insurance money and maybe build something a lot bigger. A lot of people, especially on PCH side, that's not a real concern because those lots are very small and you have like no setbacks on the side. So they're pretty much just going to build what they have.
Whatever they had before. Yeah, exactly. But somebody on a bigger lot could obviously build bigger.
Palisades is going to be different, even Eaton, because a lot of those houses were smaller, older LA houses, but on a decent sized piece of land. They might try to build bigger as well. You fill out the form, you consider if you want to build bigger, and then a year from now, maybe you're thinking, maybe I can't get this done. Just don't waste your 2-year window as an escape plan, if you will.
But your 2-year window essentially is
starts the day of the fire.
Was the 2-year you had 2 years from the disaster, the declared state of emergency in order to get the property tax base forgiveness?
No,
sell your house and take
over.
So
sorry, but the actual claim form is 1 year. You have 1 year to file the misfortune and calamity claim form.
You got 1 year to file the misfortune and calamity claim, and then if I sell my house 2 years, 3 years down the, like you were saying that if I'm doing my due diligence, I'm figuring it out, I'm seeing what my friends are doing, I'm seeing what my community is doing. 3 years from now, I may decide, you know what, I can't do it.
That's gonna be too late.
So how long do I have to make that decision then?
That one is 2 years.
2 years from okay, I got to make a decision. That's going to be interesting. So that's going to force people to make a decision.
Next summer is going to be insane on forcing people to make a decision because like I said, you'll be 18 months out.
Are we talking about all I need to do is file it 2 years from the disaster? File it within 1 year.
File it within 1 year.
And I got to make the decision as to whether or not I'm going to take it with me.
Well, you have to close the sale within 2 years. So
I got to close.
You make the decision before that.
I see what you're saying. There you go.
That's what I'm saying. Next summer is going to be, you got to make the move or not. If you think you're going to rebuild your house, you just go with it or don't, because you got to start looking for a house if you're not going to.
That's a very important logistic right there. I'm sure there's going to be a lot of people who just kind of didn't really realize that and might get stuck. I wonder what do you think the tax assessor would do if I'm like, you know what, I didn't really realize it. My plan was this, it changed. I mean,
nothing. This is a revenue and taxation code section in the California Constitution. But below the California Constitution, they can't do anything.
Wow. Well, we gotta talk to our clients as real estate agents. We got to make sure our clients understand that. We got to get the word out about this. So
I agree.
Interesting.
We're telling all of our clients too.
What else, Carl? I mean, we've got I think a lot of people know right now about the parent-child exclusion, how that kind of went away. And if I'm not mistaken, it's you have to move into the property. If your mom or dad pass away, you got to move into the property, and the first $1 million is exempt, but anything above that can get reassessed. How does that work?
Yeah, so a brief overview of that. You have 1 year from the date of your parents' death to move into the property. And they made this specifically a little confusing because then you have 3 years from their death to file the claim form itself, which is a separate form. We recommend everyone do it within the first year. You have to move into your parents' house within 1 year. That's the main important thing to get your property tax savings from the date of their death. It's $1 million exclusion plus the existing assessment. Let's say your parents have owned the property for years. Maybe, I mean, heck, even if it's in the valley somewhere.
It's a $3 million house.
Yeah.
And they pay, well, no, let's just say it's $2.5 million house, and they paid $300,000 for it in 1980.
Yeah, so right now they're probably assessed at $500,000 because it's only gone up 2% a year max on Prop 13, right? So let's say it's assessed at $500,000, it's worth 2.5. You're allowed to keep that $500,000 for the market value of $1 million plus the assessed value. So you have $1.5 million in market value. Get your assessment back down to the original $500,000.
Back that up for me. How did you get the $1.5 million of market value? So I understood the 500,000 because of 3% or 2% every year, whatever it was. So I get that for the first million, right?
That's the thing. It's $1 million. It's $1 million plus your existing assessed value.
Well, the existing assessed value in this case is 500,000, right?
Yes.
Okay, so how does
so
it move in 1 year?
The house is worth $1.5 million.
Oh, I was saying it was worth $2.5 million.
No, I know, and that's why it's important. So $1 million plus the current assessed value is $1.5 million. If the house is worth any more than that, you get to keep the $500,000 plus the difference in that. It's a calculation. The difference between the $1.5 million and the actual market value of $2.5.
First $500,000, well, because that was the basis, plus 1 million over that.
Yes.
That brings it to 1.5. And if the current market value of the house is 2.5, then you have to pay taxes on that 1 million.
Yes. So your new basis is 1.5. It's a very testy equation. I think the easiest way to look at it is just look at the purchase price and subtract $1 million. If that is
you mean the current take the current market value.
Current market value, yes.
And subtract $1 million.
Yeah, if you take the current market value and subtract $1 million, is that more than?
Yeah, if it's a $2.5 million house and you subtract it by $1 million, that's 1.5.
Yeah.
And their basis was 500.
Yeah, and they're allowed the basis plus $1 million.
So that's where the basic. So then the basis now becomes taxed at. Is it so? My tax at 1.25% of 1.5 million. Okay, got it. So property taxes are still going up for a lot of people. I mean,
they are
into it. It's the ones that are. Yeah, this is a big deal. Prop 19 being removing that parent-child exclusion is just a huge deal. I mean,
it is a very specific calculation that they made it. So
obviously,
to keep track of.
Yeah, obviously not good for those that have owned properties for generations, and good for I guess those people that are housing, the housing issues that we have in Los Angeles, right? I'm guessing a few more people will decide to put the house on the market and sell it, which will create opportunities for new people to get into a house. What are we seeing in terms of whether or not this will be repealed, or what do we know about that?
The Howard Jarvis Taxpayer Association, the people who passed Prop 13 back in 78, they're trying, but they've never gotten close to the amount of signatures necessary. They try like every 2 years to get signatures to get this on the ballot, to go back to the old rules, which was very simple. It was, if your parents had their primary residence, it does not matter what the current market value is. You get to keep it. You get to keep their property tax value regardless.
Interesting.
There was no limit. And the limit was for other properties, commercial, industrial, apartment buildings. You used to keep their old assessed value up to $1 million per parent. That is all gone. That is all changed in 2021.
Yeah, I know a lot of a lot of clients that are unhappy with that. We do a lot of trust and probate work. So, and a lot of our clients are inheriting their parents' houses, and some of them are basically saying, if I could have kept the property tax base where it was, I could make it work with the rental prices. But
yeah,
some cases
it destroys cash flow. For apartment buildings, there's no exclusion. It is the new reality. You're being taxed at market value.
We'll talk about turnover. I guess there's additional and then there's tax due on sale and city and county transfer taxes and all that kind of stuff. So I can see where that's I can see where that's obviously good for the city, and again not so good for the homeowner.
Agreed. But at that point, then you have one last recourse, and I'll let that lead into our last part here. Assessment appeals, right? So if you in any change of ownership that the assessor is allowed to reassess your property. Doesn't matter what kind of property, apartment building, house, commercial industrial building, anything you have. On change in ownership, sometimes upon death, like a lot of Alan's clients, or transfer, you buy a property and the assessor doesn't accept your sales price that you reported, you are allowed to appeal the assessed value that the assessor puts on your property,
Okay.
no matter what. And another
Fire,
bonus.
fire or no fire, you're saying?
Yeah, fire or no fire. We're appealing things all the time. In fact, we have a lot of clients that purchased property in the last 10 years. But even certain markets have gone down, like office buildings specifically. They have a lot of vacancy issues.
Oh, because of COVID. You're saying there's a lot of vacancy because of COVID.
Yeah.
So obviously those, I mean, we've all heard the stories of like the big towers in Los Angeles where they're like 50% vacant and they've gone down, 30%, right?
They have. And in that case, you're allowed to, aside from any change in ownership revaluation, you're allowed to appeal the value of any property as of January 1st of each year. So your taxes, your assessed value is technically based on the market value, is based on the lower of your old assessed value, your Prop 13 protected value, or market value as of January 1st of every year. So for example, if you have a client that bought a property 5 years ago, possibly pre-COVID, they bought an office building for $10 million, something small on Ventura, and they had a bunch of tenants, and then they all left, that building's probably not worth $10 million today, even 5 years later. So you're allowed to appeal the value in the summer. So is
that comp based? In other words, I got to show the sale, like if I'm not mistaken, in residential, like after COVID, people were sending comps and they were saying, hey, look at the value of these 3 houses, therefore mine should be X. Is it the same?
It's a little different. You are supposed to do comparable sales for office buildings, but the most common way to value them is based on how much income they provide, because it's assumed that those properties are investments and are supposed to bring a certain return. So what you're doing is you're taking market rents for offices and you're saying, look, these market rents are way lower than what I was getting 5 years ago. And it's either I take the lower rents or I have a vacancy and I'm not making any money at all, right? So maybe it makes the property only worth $6.5 million.
Got it. What's that form called and how easy is that to do?
So that's an assessment appeal form. You're allowed to file online with the assessor, with the Assessment Appeals Board, which is an independent group that's run by the County Board of Supervisors, political appointees. It's not affiliated with the assessor. What happens is they have people who adjudicate your data and compare it to whatever the assessor has put together when you appeal, and you can appeal the value every year if it needs it.
Got it.
And that's what we're doing with a lot of our clients. Retail is coming back a little bit, but still a little soft. Some people have apartment buildings in areas that had a lot of significant job losses and they have a lot of vacancy, or because of certain LA City restrictions, they weren't allowed to collect rent on a bunch of units for a couple of years. That affects the income. And that's something you can show. If you can document it and you can show it, you can appeal for a reduction in your assessed value for certain years. Every year you have a new opportunity to appeal that year.
Awesome. Carl, man, you're a wealth of knowledge, man. Is it I'm sure people are going to be watching this video. Can they contact you directly?
Yes, absolutely. My information will be in the bottom of this video, I believe.
Yeah. We'll put it in the bottom of the video. And then you guys can contact Carl directly. I have, just worked with Carl in a number of situations with clients, and he's been able to make some things happen. So I definitely encourage you to reach out to Carl if you have questions about property taxes. I think that's it, guys. Carl's info will be in the description below. Please make sure to like this video, share it with anybody that is looking to has questions about their property tax situation, whether it's fire or not. And make sure to subscribe for more real estate updates or property walkthrough tours. Thanks so much for watching, guys.
Thank you.
Thanks, Carl. Carl, thanks for being on here.
Hey, no problem. Thanks, Alan.